We had a great break. We are back, ready to go with some more amazing companies. Starting off with Benchmark Metals, trades on the OTCQX under the symbol BNCHF. Benchmark is a Canadian mineral exploration company focused on providing and developing the substantial resource potential of the Lawyers Gold Silver Project, located in the prolific Golden Horseshoe of northern British Columbia, Canada. Today we have Jim Grieg, President of Benchmark Metals, and Malcolm Dorsey, Senior Geologist. Welcome, gentlemen.
Good, thank you for having us, Anna.
All right, whenever you're ready.
Very good. Okay, well, thanks everyone for attending this afternoon or morning, depending on which area of the world you're in. Benchmark Metals is a gold silver exploration company that is very rapidly and aggressively growing towards showing that it has a large world-class scale gold and silver mine in north central British Columbia. Joining me on the presentation will be one of our very senior geologists. His name's Malcolm Dorsey, sitting next to the video screen in front of you. Malcolm will go through some of the more technical and general details on why this project looks very exciting and provides opportunities to build wealth as the stock price increases with results. And so the first image you see here is Benchmark's ground in north central British Columbia. It is a formerly producing mine from 30 years ago. So 30 years ago, from 1989 to 1992, it produced a fair amount of gold and silver. The difference in the story this time, however, is gold and silver prices have increased significantly, and our exploration efforts have shown that there's much more gold and silver in the ground and ready to be mined. And you can see, unlike a lot of regions, we have trucks and roads across the network and region here, so it's easily accessible. And without further ado, we'll go into more details. And there we are. So the disclaimer statement, just to let you know that, of course, we are a Toronto Stock Exchange venture listed firm. We are also listed on the OTCQX. So there are inherent risks involving this type of company. However, as we go through the presentation, you'll see that we're removing the risk and bringing some value. The next slide. Location here, north central British Columbia. It is road accessible, as we mentioned. The Benchmark Metals company is part of a larger group called the Metals Group. Our group of professionals has a track record of creating great wealth for investors. We have taken resources, specifically mining, from new discoveries into mining scenarios and into production. And along that profile and path generated some enormous wealth for those who got involved early in the story, such as Benchmark, which is our flagship company. On to the next slide. Now here's a key to this is why you should be investing in gold and silver at the moment. And there's some very compelling and fundamental reasons why you should invest in gold and silver, and subsequently what makes Benchmark Metals attractive from a gold and silver position. So gold and silver in general are historically a store of value. It provides diversity in your portfolio and then limits some downside risk. On a safe haven asset, this is a key factor these days because inflation is becoming a very big worry into 2021. There's been such debt created and new money infiltrating the economy that prices are rising. And you can certainly see this at the gas pump with inflation in food. And inflation is just one of those factors why you should own gold. The other one, and this is a key fundamental here, gold deposits are not being explored, and there's no new gold deposits coming. So you can see this graph on the top right of your screen. And this graph goes from 1990 up to about 2019. The yellow bars represent the amount of gold in reserves and resources within mine sites. And you can see a steep decline over the past 20 to 30 years. But in addition to that, on the gray bars that you see near the end here, 2018 and 2019, there's no new discoveries. So it's a supply and demand factor. You have less gold and silver entering the system, more demand, but also no new discoveries. And so this creates a reason, a compelling reason for the gold price to rise in addition to factors like inflation. And so there's some major banks, not only in North America, but in Europe, who are projecting much higher gold prices. You can see Bank of America has projected a over $2,000 gold price. CIBC has projected 2,300, and you can see 2,100 gold. Goldman Sachs is at 2,300. You can see the value here. Big banks generally are very conservative on their projections, and these are steeply much higher than the current position. So gold is currently trading physical gold at $1,700 as we speak. And so these are steep appreciations that are expected through 2021. On to the next slide. Just to give you a mining 101 lesson on mining, because it can be slightly technical, but it doesn't need to be. It's very simple. Benchmark is at the discovery stage. So on the left-hand side of your screen, you'll see 4 steps there that include exploration, prospecting, early stage exploration, and then the truth machine. And the truth machine is the drill that goes in the ground to scientifically demonstrate how much gold and silver you've got. Benchmark has moved beyond those 4 first factors, and now we're at the discovery stage. We've completed a lot of drilling across this property, and all of this drilling goes towards proving up a resource estimate. And this resource estimate is anticipated at some point, perhaps early to mid-April, so it's only weeks away. And if you were to look at our stock chart, which we'll get to in a moment, you can see that over the past 2 months, it has been moving much higher. And we expect with some major milestone news flow coming over the months here that the market capitalization of the company should increase significantly more. And so all this work that we've done over the past several years and all the work that we're planning into 2021 and 2022 helps de-risk this project and show that it will be a mine. And best of all, as we mentioned ahead a few slides, we have the treasury and the capital in our books right now to pay for all this work. On to the next slide. Location again, north central British Columbia. So Vancouver, BC is at the southern end of the province, and the Lawyers Gold Silver project owned by Benchmark is at the north central portion of British Columbia, but it's located in a prolific and producing gold, silver, copper, mineral endowed area of the province in Canada. And look, Canada is a very good place to build a mine, as is the USA. It's not in a difficult political jurisdiction. It's in an area where you can permit and build a mine. And this is best exemplified by the yellow and red dots you see around the Golden Horseshoe. There's many world-class producers in this region, and you can see the Lawyers project owned by Benchmark on the right-hand side of your screen is approximately 30 miles away from a world-class mine called Kemess. And so we are located right next to a proven and prolific producer. On to the next slide. The key to always achieving and building wealth is placing your investment with a team who has done this before. And you can see this with the enormous amount of experience here on our board and management. Myself, Jim Grieg, I'm president, director, and a founder of the company. I've got well over 25 years experience. I've been involved with some major discoveries, one of which a few years ago was in West Africa, where we took a brand new discovery into production, and along that profile raised in excess of $300 million. But along all those steps to production, the market cap of the company moved very quickly. So it went from a 25-cent stock to a $9.50 stock, and along the way built significant wealth, simply because the team was exceedingly good. The team brings you the capital, the team brings you the project, the team executes on major milestones. My partner and senior chairman of the group, John Williamson, has the similar track record. John is an exceedingly good technician. He's got over 30 years experience. He's created some enormous wealth on many companies through the years. Most recently, he was an original founder and director at a company called Kaminak Gold. Kaminak sold their project in the Yukon to Goldcorp. And so this was just over a $500 million acquisition. And this was 5 years ago, when gold was at a much lower level. And so we're tailoring our positioning benchmark to the same type of position. Joining me on this conference call here is Malcolm Dorsey. Malcolm is a senior geologist. He holds a master's degree. He has comprehensive field, technical, and drilling experience. He's been a strategic person to help build out drill plans and grow the company. So on to the next screen. Strategically here, we're located, as mentioned, in a very prolific area. I mentioned the Kemess gold copper mine. If you see the inset map to the left-hand side of the screen, we have a road network that actually drives past this Kemess mine and goes directly to Benchmark's Lawyers Gold Silver site. We've completed upgrades on the road, which means improvement on the bridges and road conditions, which allows us to drive heavy equipment. In addition to that, we have an airstrip that sits approximately 9 miles from our site. During the 1980s and 1990s, when Lawyers was a small producer, they were landing Hercules aircraft at this airstrip. So, you know, the telling tale here is there is logistical advantages at our site already. It's a bit of a brownfield program. So this isn't a brand new discovery. We are rediscovering an existing area that has shown itself to produce gold and silver. One of the key concerns, as always, is power to deliver electricity to site. And the Kemess mine would be a logical tie-in point to the British Columbia power grid. And now on to the next slide. Corporate objectives. So we started on this project in 2018 and went from what we recognize to be a very good project, but over 2018, 2019, and 2020, with very good drill results, we could see that this had real potential to be a very large world-class mine. So last year, we completed in excess of 87,000 meters of drilling. And so that equates to approximately 200,000 feet of drilling. And this all goes towards demonstrating a new mineral resource estimate that we will be publishing in April. We're still generating news flow from drill results during 2020 drilling. And when we get to one of these next slides, you'll see these results are having an impact on the market cap of the company. It is steeply climbing upwards. And so that is the opportunity now, is to invest in this company, because there's more news to come and some major milestones. So on to these milestones now. I mentioned a resource estimate that's expected in April of this year. The second big milestone to come is a preliminary economic assessment. And this economic assessment shows the engineering, the permitting, and the steps required to show some very good economic rewards to build this mine. And that's expected this summer in Q2 of 2021. So that's a few months away, but it's soon. And that is another milestone to build value into this company. In addition to that, during the third and fourth quarter of this year, we will be completing a large minimum 100,000 meter drill program that will go towards more expansion of the resource, but also show robust engineering and geotechnical efforts to advance the mine plan. And then in 2022, we're looking towards a more refined economic and engineering study. This is called a feasibility study. So all the work we do in 2021 in terms of drilling and work on the ground will go towards a new resource estimate in 2022 that will be expanded and larger, and a feasibility study that demonstrates this is a real mine and we should begin putting shovels in the ground to mine gold and silver. So these are major milestones that will be completed over the next months to year and a half. And all of these events build great value for the company. So on to the next slide. Here you can see our share appreciation here over the last few weeks at the tail end or right-hand side of the graph. And this is set at March 12th at $1.23. If I were to talk to you about this morning or this afternoon, in Eastern North America, the stock's currently trading at about $1.45. This is due to a new press release we put out this morning that had exceedingly good gold and silver numbers attached to a long drill intercept, and it's having a big result on the market cap. It is improving our market cap. So, you know, look, we have a $35 million cash position. This all goes towards working this year and next year, so we do not need to go back to market to raise more capital. Everything is baked into this story in terms of cash that can provide for the work. There's 157 million shares outstanding, and best of all, we have approximately 16 million warrants that are in the money at about 40 cents. So with stock trading above $1.40 and warrants at 40 cents, we expect in excess of $6 million to come into the treasury very soon. This provides for more working capital. In addition to that, if we can go back one slide, I'll just mention institutional investment. So we did a $52 million raise in the fall of 2020, not long ago. This provided an exceedingly good budget for us to work forward. We had the likes of ASA or Merck Capital contribute to this, Van Eck Capital and Franklin Templeton. These are strong key institutional shareholders. For the most part, firms like this do not step in early to a company until they've completed a large resource or an economic and engineering study. These three groups stepped into Benchmark before we had these published. So I think it goes to show the quality of the management, but also quality of the asset. Management owns approximately 15% of the stock. And our key shareholder in all of this is a well-known individual called Eric Sprott. He owns just under 20%. Eric, for the most part, is one of the strongest or largest shareholders in most resource stocks. He leads the charge on projects and companies that have very strong growth potential. So let's move to the next slide. This graph here really is here to show the market cap appreciation that we're ready to see here. We're currently just over a $200 million market cap. And by the way, it was sitting at 150 million a few months ago. So it's already moved rapidly just based on drill results. With a preliminary economic assessment to come in the summer, and before that, weeks away, there is a resource estimate. And so we believe that as you move up this curve, you'll see the market cap move upwards. And we believe we will be chasing comparable companies that have a double or a triple market cap value to us as we put out these results. And there's always talk of takeover potential. And certainly if a third party or major mining company came along and made an attractive offer to Benchmark shareholders, we would take it. However, we are going to complete every single step necessary to put this into production. If along the way a large entity comes along and rewards us, we will consider it. But in order to deliver value, we need to complete all of these steps to put this into production. And best of all, we have the cash, as I said, in the treasury right now to complete the steps to a mining decision. On to the next slide. So this is a snapshot or a map on the left-hand side of our entire 100% owned package. It's approximately 100 square miles or 140 square kilometers. And key to this is it is a mineral endowed package from corner to corner. It's approximately 11-mile trend from the southeast to the northwest. In the very center of this map, you'll see those black polygons. Those three circles or envelopes, if you will, are the resource areas that we will be publishing in April. These areas will go towards showing that we have a multi-million ounce gold and silver resource. But the bigger upside to this are the other colors that you see in red, yellow, and purple. These are brand new discovery zones, and some of them hold the same potential that we see in the center of the property, the resource areas. And so there's some very good high grade gold that we've encountered at surface in all of these new targets. And Malcolm will go into a bit of why these are compelling targets. But most of all, he'll go into explaining why the resource areas are rich with gold and silver. And just to give you a small sample of the drill results, you can see at the bottom, and apologies for our American viewership, but 3 meters of 260 grams gold and 3,300 grams silver is bonanza grade, very exceptional. These are many ounces of gold and multiple ounces of silver. So these are exceptional grades, and we will show that these are all economic parameters to build a PEA study this summer. On to the next slide. So this is a snapshot of the center of the property. So here you can see the yellow, if you will, potential ore body in the center of each of these three large depressed areas. These three large depressions are what will be open pitable or an open pit style mining. And for those of you that are somewhat newbies to the mining sector, in general, open pit mining is the most cost-effective way to pull rock out of the ground and crush the rock and bring gold and silver out of it rather than underground. Underground mining is actually a little bit more expensive because you've got to go deeper. However, we have at surface what we believe will be mineable gold and silver. And the largest zone is the Cliff Creek zone. It measures 1.2 kilometers on strike length. That is approximately close to 4,000 feet in length, so it's very long. Sorry, I'm wrong, not 4,000 feet. So divide that by approximately 3. So it's a very long open pit here. We're talking on Cliff Creek. But in addition to that, we have the Dukes Ridge Zone and the Agb Zone. The Agb Zone is a much higher grade area. It represents what could be an initial starting pit when this goes into production. And this Agb Zone is what the press release was put out this morning on. Some very, very good high-grade gold and silver from surface. So just to touch base on metallurgy, and metallurgy is how you convert from rock to gold and silver in bars. And what we're showing here is that we can recover up to 98% on the gold and 97% on the silver from the rock. These are exceedingly good rates. And just a quick touch on exploration target. Well over a year ago, we published this bulk tonnage exploration target just on the Cliff Creek zone, and it was based on all the data up to 2019, so well over a year ago. And just this target alone was showing near 1.9 million ounces gold equivalent of gold and silver. That graded 1.7 grams gold equivalent. So this is exceedingly good. This is multi-million ounce, but when our resource comes out here in a few weeks, we will be adding the Dukes Ridge Zone to this, the Agb Zone, but also expansion based on drilling we performed in 2020. There's also some underground potential below these large areas. So this endeavor, this mining project shows potential for open pit mining, but also higher grade underground mining below these pit shells that you see on your screen. So on to the next slide. And without further ado, I'm going to pass things off to my colleague, Malcolm Dorsey. And Malcolm will go through 3 of the areas and explain why it is minerally enriched with gold and silver. And we'll try not to get too scientific, but these are results that are based on all of our drilling and shows that this is a compelling reason to invest in best benchmark metals. So without further ado, go ahead, Malcolm.
All right, thanks, Jim. So for these next couple slides, I'm going to be focusing on our resource zones. So that'll be Cliff Creek, Agb, and Dukes Ridge, Phoenix, but mostly we'll be focusing on Cliff Creek and Agb. So what you see on this side is actually the Cliff Creek North Zone. So we call it the North Zone because it's a subsection of our entire Cliff Creek deposit. So if you look in the top left of your screen, you'll see a plan view. So that's looking from above down onto what the deposit outlines would be. The green line that you see is the model 2019 pit shell that we made, which gives us an idea of targeting for the mineralization. Within the highlighted yellow zone is our Cliff Creek North section. So that's about 900 feet by 600 feet in dimensions. And all the little black dots that you see are the drill holes that have been drilled into that section. So it's important to note as well, a lot of what you'll see on this slide is what we call gold equivalent. So gold equivalent is just combining our gold and silver values based on the value of gold and bringing it into a single gold equivalent. So that's combined both gold and silver values. So when we look at the Cliff Creek North section, all those drill holes that you see on the right-hand side just give us small windows into where the mineralization is going in the subsurface. So by drilling more, we get a better idea of where that mineralization is going, and we de-risk the project as we continue to drill more into those areas so that we get larger and larger windows. So that's what you see in the bottom left screen there is an image just showing the density of the drill holes within that section. So you can see that we've drilled a lot, we've defined a lot of the resource, so we have a good idea on where the mineralization is and where it's going. And you can see on the right-hand side that that mineralization actually continues and it's open to depth. So this is good, as we know that we can follow this up in resource drilling next year. We can continue to test the mineralization as it continues to depth. And we've been gaining some phenomenally good new grades within Cliff Creek North. Then this past year alone, we've extended the mineralization down by about another 100 meters or so, so about 300, just over 300 feet below the model pit shell. And we're getting some great grades. You'll see hole 74 there is about 15.35 meters of 5.41 grams per ton gold equivalent. So this is proving to be high grade at depth, continuity of mineralization. It'll provide good potential for underground drilling in the future. So on to the next slide at this point. So looking at the Cliff Creek South Zone. So again, look to the top left there, you'll see that plan view. So looking down on the deposit, and you'll see that the highlighted zone is now in the southern section of the Cliff Creek deposit. So what we're seeing here is broadening of the mineralization at depth and better continuity. So this is good in seeing that the mineralization continues, and it seems to be broadening as we go down towards the south. So this will again provide good potential for underground drilling, likely earlier on than previously thought. And we're getting good intercepts within this as well. You'll see hole 63 there, got 186 meters of 1.66 grams per ton gold equivalent. So we have both broad, low-grade gold potential as well as high-grade intervals, which is all going to add into positive economics for mining the deposit. So on to the next slide, and we'll be looking at the Agb zone. So Agb, you'll see the left-hand image, again, a plan view looking down on the Agb deposit. Those darker red lines are the historic mining that was done back in the 80s and 90s. And the light pink zones is the mineralization, as you saw in the Cliff Creek zone. So as you can see, the light pink extends beyond, going to the northwest as well as southeast. And it's important to note that the Agb zone is about, it's about 2,100 feet in strike length, so 2,100 feet long, and the mineralization extends down to about 900 feet depth. In comparison, the Cliff Creek North zone was about 1,600 feet vertical depth for mineralization, and Cliff Creek South was about 1,300 feet vertical depth. So we're seeing great continuity as we go down in vertical depth from surface. So we're getting mineralization from surface, and mineralization continues and remains open in all these zones as we continue drilling. So we've got Agb. We had a major news release this morning, which has had, well, it showed exceptional good grades, some of the best that I've seen within the Agb zone. It's already causing a very positive impact on our share price. So I believe we're up about 10 cents this morning at $1.45 per share. So some very positive results, and we've got some very good grades that we've started to intercept within this zone. In the central zone, we released some results in hole 60. That was 53 meters of 7.59 gram, well, gold equivalent. And in the southern zone in hole 45, we're getting about 43 meters of 2.62 grams, well, gold equivalent. And that's important as we're seeing good continuity of mineralization as we go to the south of Agb. And we expect this to continue as it's meeting our geological model and as we continue to test this in next year's drilling. So some very good results. We're seeing that all our zones remain open in all directions, and we'll be able to expand on this with drilling next year. So I will pass this on back to Jim to go over our value proposition.
Very good, thanks, Malcolm. Look, there's a few factors here to touch base on why this is good value to invest in Benchmark Metals now. And one of the key ones is management and board collectively has done this before during good mining cycles, and we're entering an exciting cycle as we speak. We have created shareholder value before. We have a project that meets scope and scale to be a true world-class gold and silver mine. The asset was 100% owned by Benchmark. We're about to drill another over 100,000 meters in 2021, which will further advance the project. But in terms of news flow and milestones to come, we're still delivering drill results. These drill results are having an impact on the market capitalization or share appreciation of the stock. We're seeing that even today. We will continue with additional drill results over the coming weeks, but that will be followed by a robust mineral resource estimate that shows how much gold and silver we truly have in the ground, and that is around the corner. That's very close. This resource will be followed by a preliminary economic assessment, and this is the economics and engineering that shows that this is a viable endeavor, this is a viable mine. And these are steps that are going to happen over the coming months. In addition to that, you can't forget that we've got a very robust treasury. We have all the cash in the treasury to complete this work over the next 18 months to show that we're ready to put shovels in the ground. We also have an exceedingly large amount of warrants that are currently in the money, but there's also another allotment of warrants that are in the money soon as our market cap grows. So without further ado, I'd have to say, look, this is just one of those compelling stories to invest in a gold silver company, but also the fundamentals for gold and silver are exceedingly good. Large banks around the world are showing that the gold price is going to increase over this year, and that's reason enough just to invest in a strong gold silver company. So if there's any questions, I'd be more than happy to field any questions to Malcolm and myself.
Yes, we do have a few questions. Thank you, gentlemen.
Good, thanks, Anna.
All right, here we go. So are there any major players currently producing around your property?
So nearby, about 30 miles away, is Centerra's gold copper mine. That mine is currently on care and maintenance, and there are plans to put this back into production. But the closest endeavor is on the other side or western side of the basin, just under 100 miles away approximately. It's Pretium, and Pretium rapidly put its mine into production just a few years ago. It went from a brand new discovery, much like the profile of Benchmark, raised all the cash necessary, and now is a large, actually world-class mine producing near 200,000 ounces a year. So there are prolific mines in the region here, and we're following that roadmap. Go ahead, Anna, with another question.
Yes, thank you. What type of funding have you done? Any convertible instruments or straight equity?
It's been straight equity. We have no overhang from debt positions. It's been all cash equity into the company. We have no debt, $35 million in the balance sheet, and warrants and options that are in the money. Go ahead,
Fantastic. Anna. All right, so precious metals are down about 30% since August last year. Where do your commodity prices, where are they going? And is your production cost going to be low enough to remain profitable?
Yes, so look, gold and silver has had a tremendous run over the last year to 2 years, and it's climbed from $1,300 to over $2,000. And so naturally, you would expect a bit of a pullback as you can't continue a perfect line upwards. And so that's what's happened over the last couple months. There's been a bit of a soft pullback on the gold price. However, that's actually good to see because it sets itself up for another takeoff. And we truly believe that gold and silver, by the way, is going to move much higher into 2021 and 2022. In terms of profile and production and costs, We'll have a better understanding of that into the preliminary economic assessment that will be released this summer. But I think there's every reason to believe that this project, given its very good grade at surface, and there's already logistic advantages here from a formerly producing mine, that we will have a very good or clean cost profile. There's no reason to believe that we shouldn't fit within an average production cost or better. So I would say, conservatively speaking, $1,000 an ounce cost is very achievable, but we'll probably beat that. So currently at a $1,700 gold price and a $1,000 production price, you're looking at a large margin for profit. Go ahead, Anna.
Can you say again when you expect to start production?
So production is several years away. I would say you're probably looking at a minimum 3 years away, but you've got to keep in mind that is when the best wealth can be generated in a mining cycle. As you go towards the mining decision, that's when the most appreciation in the market capitalization happens. So the time to get into exploration to discovery, which is where we're at right now, is immediately, because there's a resource around the corner. But to simply answer the question, we'd be minimum 3 or more years away to a point of putting shovels in the ground.
And last question. So lately, cryptocurrencies have become a popular hedge. Do you see precious metals becoming more attractive as inflation gets greater?
I would say absolutely. Look, the Bitcoins and cryptocurrencies have likely had a bit of an impact on gold sector buying. However, the difference in this one is gold is a physical attribute. It is most definitely a hedge against inflation. It's a store of value. So there are projections here that inflation is going to get rather vicious over the coming 2 years, just simply because the amount of money that's been pushed into our economic system. And you can already see that the price of the gas pump has increased, and this will have an impact on gold. Gold is strongly correlated to the inflation number.
Well, gentlemen, we have just a few more minutes. If you would like to make a few closing remarks, the floor is yours.
Good, thank you, Anna. I suppose just in summary is, look, we trade on the OTCQX as BNCHF. We're also on the Toronto Venture Exchange under BNCH. We have a lot of news flow coming over the next few weeks, followed by 2 big major milestone events, a large, robust resource estimate, and then a preliminary economic assessment this summer. So a lot of news to come that will help build the share appreciation. Thanks for listening.
Thank you so much for your presentation. We appreciate that knowledgeable presentation. We look forward to all of your future and see what happens. Thank you, guys.
Thank you, Anna.
All right, thanks.
Thank you, Malcolm. Thank you, Jim. All right, we have a few minutes to go before our next presenter, so we're going to take a quick few-minute break, and then we'll be right back in about 4 minutes.